Hello, guys. What is happening? Happy Friday, and welcome to this live stream. So, in today's live stream, we're going over what is going on in New Zealand right now. And we actually have a couple of subscribers from New Zealand. And if they join us in that stream, that would be great. I know that a couple of them left comments on the previous video that we did, but this could be good news if you're looking to buy a home in Canada, because what's going on in New Zealand doesn't mean the same thing is going to play out, but the probability of it playing out like that is very high. And the reason for that is household debt levels are very similar. So the exposure that households have to rising interest rates is relatively similar between Canada and New Zealand. So we can use them because they are ahead in the rate cycle to basically not forecast, but estimate the probability of the same thing happening here. So, anyway, without further ado, I'm going to pull up this article here. And New Zealand banks urge the Reserve Bank of New Zealand to delay new lending restrictions. Now, this is the Reserve Bank of New Zealand is basically the central bank, like the Bank of Canada here, and they're talking about new lending restrictions. Now, before we get into this, I just want to mention real quick, if you don't think these conversations are going on behind doors in government, then you're off your head, because they are. So the conversations I'm talking about in particular are the government is looking at the immigration statistics and the amount of people in the pools and everything like that, and that are coming to the country, and they're thinking, why can't we attract highly skilled immigrants anymore? We mostly attract low skilled immigrants, and we keep having to lower the goalposts in order to fill our targets and make us look really good. And the thing is, they're having those conversations, and I guarantee people are saying, well, it's because housing is so expensive. It's because the cost of living is so expensive. People don't want to come here. The main comparison that people are making with coming to Canada is the United States, just as Australia would be the main comparison if people were looking to move to New Zealand. So the thing is, when comparing between the United States and Canada, there is no comparison. If you're a highly skilled immigrant, so you're going to go to the United States. Now, the thing is, that's kind of solidified it. Now, when I came to Canada in 2016, and when we were looking to come to Canada in around 2014, I want to say 2013, when we started looking at coming to Canada, when we visited Canada and everything like that, it was a different place. It was much, much more affordable, and it was almost undervalued for what it was. It had a fairly strong economy at that time, and the dollar was very strong. Canadians had great purchasing power back then, but you just could not have seen more of a substantial decline over the past 7 years. Like, look at what your dollar buys you now. Oil at 130 bucks, and the Canadian dollar's trading at around 77 cents. Last time it was at that price, it was over a dollar to the US you were getting. So it's incredibly interesting. Those conversations are happening, and believe me, this is why these sort of things are coming up, like in this article. So, anyway, let's dig into this. New Zealand banks are calling on the Reserve Bank to delay implementation of new mortgage lending restrictions, such as debt to income ratios, as the housing market cools. Now, they're never going to say the housing market is crashing for a start off, or tanking, or use any of that kind of language. But the interesting thing is, I've heard the OFSI is now discussing similar things right now. Now, they're just monitoring and discussing right now, but they're not further along down the line that they could go for it. And what I can really see happening here in Canada is they start to raise rates, prices start to cool, the housing market starts to cool, and then the government says, this is our perfect opportunity. Now prices are going down to rein in lending, to really rein it in. And then they put in all these restrictions, not realizing how the housing market is a total Ponzi scheme and just collapse it by accident. Now, I'm not saying the probability of that is really, really high, but they're discussing it. Those conversations are definitely going on within government, whether you accept it or not. The thing is, Canada and New Zealand are in the same boat. Both rely on immigration because the birth rate is so terribly low that natural population growth isn't happening because they failed and sold out their own citizens. So they rely on the Ponzi of bringing in new immigrants like myself, fooling them into the idea. I mean, God knows how you could be fooled to move here in 2021. I have no idea. I mean, if I was looking to move like back in 2013 and the prices were like they are now, I wouldn't even be considering Canada. I would have striked it off the list straight away. So if for people that believe that they're getting any sort of high level immigrants coming here, it's just not happening. It's mostly low skilled. So anyway, let's dig through this. Existing restrictions and rising interest rates are already slowing home lending growth, and banks are concerned the introduction of further limits could have unintended consequences. The New Zealand Bankers Association said in a submission to the Reserve Bank, of New Zealand, it urged the central bank to assess the impact of market changes before using additional tools. We always see this language. It's like it doesn't matter what country you're in the West, it's always the same language. Additional tools, or this use of the word tools now. I mean, whatever, but it is, yeah, unintended consequences definitely could be a theme of what's happening. The banks are basically screaming, don't do this, otherwise you're going to crash the market. However, what it's showing is that just increasing the interest rates is doing that just fine. If they keep just going along on that path, then it will continue. And before we get too much further, I just want to show you, I want to pull up where New Zealand is on interest rates. And that way you can see that they're barely, I mean, so you just saw that article right there, which said about interest rates. And look at where they're at. They're at 1% for interest rates. Like, that is still insanely low. So you're probably asking, well, Luke, how is it possible that they could be at 1%, which is below where they were before, which was, funnily enough, at the same rate as Canada had, 1.75%. They're now at this 1%. So how on earth is the housing market tanking? Like, wouldn't it have to get above 1.75%? And the answer to that is no. And the reason is it's because of household debt. Because household debt has gone up so much, the what do I want to call it? The debt servicing costs, because there's more debt, households have more debt now. The debt servicing costs are higher because it means they're more exposed to rising rates than they were. That continues to happen as household debt gets pushed further and further and further. Then guess what? And when it starts to reverse, that's a big indication of what's coming. And what I'll show you real quick is Canada and New Zealand. I mean, they have practically the same chart when it comes to household debt. So you can see that, first of all, the household debt statistics are very lagging behind in both countries. So the latest statistics I think we've got are, here we go, September 2021, which is a long time ago, to say the least. We're in March and we're looking at September 2021. So we're probably coming down. I'm assuming that the household debt is going to have come down since then. And when that starts to happen, as if we pulled up the chart for the United States on what happened in the United States, was in 2008. Well, actually, it was before 2008. I want to be clear about that. It's before 2008 when household debt starts to reverse, and that was the whole thing that caused the crisis. In fact, I think it was around 2007 when household debt started to reverse. So household debt starting to reverse is a key indication of what's coming in the housing market, because the main thing that people are buying are houses. That's the main thing that households spend money on these days. So you guys are awfully quiet in the chat tonight. There's nobody in there. But I did turn the chat into a subscriber only chat, and that was only so that we didn't get people in there scamming, because there's been just a raft of these weird debt collector type scams for the channel. But there's nobody in the chat. That's really bizarre, is it? Oh, what is going on? Maybe I can't see it on my end. Um, but yeah, that is bizarre. I can't see the chat on here. Oh well, I'll have to figure that out for the next one. I can see it on the other page I've got up here. I just can't pull it up on the screen for some reason. So I'll have to change it on the next one. It's not working through StreamYard. But anyways, I think half of all new mortgages are done at variable rates. Yeah, and that's totally true. And that leaves you even more exposed. That leaves you even more exposed to rising rates. So that, I mean, it's just incredible what's going on right now. But anyway, people will be what they'll be. And let's have a look at Canada, because Canada is exactly the same. But before we do, if we go, yeah, so September 2021 was our last reference. Canada's a little more ahead with their statistics. So this is Canada, but you may look at this chart and be like, oh, it looks like exactly the same chart as New Zealand. Let's go back to New Zealand. It's pretty much the same sort of, since 2020, up, then down, then up again, is exactly what we're seeing on the Canada one. So the thing is, obviously, this is going to have gone up further since then, but this is what is going on? It's saying that my connection is what is going on? It's saying my connection's poor. I hope this is going well. Oh, it's gone now. All right. I don't know what the hell is going on with this stream tonight. But anyway, the household debt, that is a high indication. So anyway, we'll get back to the article now. So New Zealand's booming housing market last year prompted the RBNZ to begin consulting on the introduction of new lending restrictions to reduce financial stability risks as borrowers took on increasingly large amounts of debt. The RBNZ has said DTI ratios, which would tie the amount of a person could borrow to their income. So I suppose that's your debt servicing ratio, basically. I forgot what they call it in Canada. Could be imposed by the fourth quarter of this year. So it's coming, and OFSI is talking about this same thing. So they started talking about this for next year. Who knows? But it's very interesting that they're doing such similar things. It's almost like they're following each other. And however, the housing market is now showing signs of slowing, and economists expect prices to fall this year and next year. Did you hear that, guys? Prices to fall this year and next year. And they're at 0.75%, and they're probably going to keep hiking. I mean, this is just absolute. I mean, people, to a lot of us, to those of us like myself that are prudent investors, and believe me, I would not buy a house if anybody paid me in Canada, and I never want to buy a house here just because of the tax implications of owning a home, because I don't plan on being a long-term resident. But the thing is, the the interesting thing about all this is just people right now. Just think about it. Friday, right now, people are probably in open houses across the country, like getting all emotional, crying about a house and saying, "Oh, this is the best decision we've ever made, Sally. This is fantastic." And they're just going to get absolutely flattened and steamrolled over the next couple of years, and they just don't even know it. And the thing is, there's no certainties, only probabilities, but the probability is very high. It just keeps getting higher and higher. It doesn't get lower. It just keeps on getting higher and higher. And the amount of new listings that we've seen come on in Calgary, and what I'm hearing rumblings of the same things happening all over the country since this interest rate hike happened, is just showing you. And of course, that the one interest rate hike that happened, I don't think is going to be enough to cool the market. But there's another one coming, and then there's another and another and another. And if you look at what's happening with the bonds, which we'll get into, it's just going to blow your mind of where interest rates could end up. People could be flattened. They will be flattened. So, current lending restrictions include loan to value ratios, LVRs, which limit lending to people with low deposits, and the Credit Contracts and Consumer Finance Act, which imposes additional obligation on lenders to review a client's ability to service a loan. So, the combination of LVR restrictions, CCCFA, you got any more C's there? Changes, increasing interest rates, and taxation changes in particular appear to be having the effect of slowing growth in the home lending market. And I think the principal thing here is the interest rates. let's be honest. All this other funny stuff that they're doing, yeah, I'm sure it has some kind of small effect, but it's very limited, as we've seen with the very limited restrictions that have been done thus far in Canada. There was a risk of contradictory outcomes as some borrowers may pass some lending criteria, but fail others. Oh yeah, yeah. I don't know what was going on. I was reading that wrong. The outcome would be very difficult for frontline staff to explain to a customer and would cause frustration and poor customer experience, the association said. Once the RBNZ has developed and finalized a DTI framework, banks must have at least 12 months to implement the tool, it said. New Zealand banks posted record profits last year, stoked by the housing boom. And once again, guys, who else posted record profits last year? The banks in Canada. It's exactly the same sort of situation. And you know what makes Canada even more risky? I mean, even more exposed is if we go back to this household debt chart again, and you take a look at this, and I'll blow this up even bigger. But you can see here, New Zealand. So if you look here, 98, okay? So that's where they're at back then. And now we're going to switch over to Canada. Okay. Did that work? Yeah, it did. Canada's at 110. So Canadian households have way more debt than New Zealand households. New Zealand households felt that crunch at 75 basis points. 75 basis points, 0.75% interest. And they ain't even done. They are not even done. The central banks, guys, are pledging to use their tools, their only tool, which is interest rate hikes, to tame inflation. You and me are smart enough to know, we don't have to be very smart at all, that the central banks don't control inflation. Now, they control asset bubbles, granted, but they don't control inflation. So the fact is, yeah, they can raise rates, collapse the economy, and then inflation goes down and you get disinflation. But I think it's very unlikely that you could get inflation actually going, like becoming deflationary. Even I'm starting to think that even if asset bubbles collapse, unemployment rises, everything happens like that, the pressures that that'll put on the currency will keep inflation rising. So the central banks are in this position where they are literally screwed. They're literally watching households being hung out to dry as we speak by high fuel prices, high food prices, high everything prices. And what are they going to do? They're going to raise rates. That's their only tool in the toolkit, apart from a central bank digital currency, which I don't even think is going to happen. And that would take away so many people's freedom. It wouldn't be worth it. But I don't think that's happening yet. I think a central bank digital currency is coming, but I don't think so yet. So the thing is, this is very, very interesting, and it's something we're going to continue to monitor and keep an eye on. As I've said before, we have done a video previous month about this New Zealand debacle, and it just gets worse every month. Surprise, surprise. Prices are declining in New Zealand. They're forecasting that prices are going to decline this year and next year. So that's right now with the market right now. You have to realize, guys, that these people who are forecasting look at the market right now and then they forecast that over the next couple of years. But if you add in a couple more hikes, the market's going to change even more. And then what's going to happen? But New Zealand has that dilemma that Canada has, which is that it relies on immigrants to come to keep its economy going because it sold out its own residents. It created huge asset bubbles. Birth rates are extremely low in both countries. So they're not getting that organic population growth. So now they got to bring in people. But the highly skilled people, guess what? They have skills and they're going to go other places. And it might be Australia, even though they're in a massive bubble as well, might be the United States. I think the United States is going to benefit a lot from the highly skilled immigrants because they're just going to be looking at places like Canada and be going, are you kidding me? Like, it's so, I find it really, really, really funny what's going on. But we're going to switch over now and look at what's happening with bonds because I think that, again, and I know some of you are probably going to be thinking, Luke, I don't understand anything you're going on about, but that's okay. I'll try and explain it best as I can as we go along. But let's take a look at the 5-year bond, and we're going to get onto the yield curve in the next video. So stay tuned for that because that's predicting a recession. But if we look at where the bond is right now, you can see that the bond is at 180. Like the 5-year bond is what they base the 5-year fixed rate mortgage off. And you can see right here, it's at the highs again. Like it's right at the highs. And if we even go to a 3-year chart, then you can see that this is soaring. Like it's the highest it's been in 3 years. Like interest rates are going higher. And this affects what businesses are paying. And this it started really going parabolic in September of last year. With that in mind, September of last year, what started to rise drastically in September of last year? Bankruptcies, business bankruptcies. So they like a lot of corporate bonds are tied heavily to what happens with the government of Canada bonds because they're the safer bonds to that. And we're going to go over in the next video about what's happening with these high yield corporate bonds, what's happening with junk debt, because that's incredibly important to understand from an economics perspective because plays into bankruptcies because if they're paying more interest for their payments, there's going to be more defaults, more bankruptcies. And that's exactly what we've seen. So we've seen since September, bankruptcies skyrocketed. So you can see, guys, it's no coincidence that bonds went on this. We're looking at New Zealand. It's no coincidence that the bonds started going up here in September. Okay. And they've gone parabolic. It is no coincidence that if we now flip back here and in September, that is when bankruptcies started to increase. Now, don't get me wrong. We are not at pre-pandemic highs yet, but this could go a lot higher, and it could be the reversal, because if you look at the chart, bankruptcies have been trending down for a long, long time now during this current cycle, which you'd expect. But this looks like a reversal to me. Now, I may be wrong about that, but we will have to continue to monitor this. But it's, as I said, those rates that businesses pay are tied to what the bonds are doing, and the bonds are flying. So with that in mind, I'm now going to take you to New Zealand's bonds, because New Zealand, if they're ahead in their hikes, surely we can look at them and see where these bonds are going to go. And this might just be enough to scare the hell out of you. So their 5-year bond is trading 1% higher than Canada's 5-year government bond. So if that happened, that would mean like 5-year fixed rate mortgage would be going to 4%, possibly exceeding 4%. That would be the highest since 2008, I think, that you've had mortgage rates in Canada. That would absolutely destroy the housing market. Now, the thing is, because variables are playing catch up with these rates, yes, everybody can pile into variables, expose themselves even more to the risk. But if people can't afford a fixed rate mortgage, they should not be getting into a variable. And if we look at the 3-year, just look at this. It is the New Zealand bond is at the highest it's been in a long, long time, since 2018, and it's just going higher. Like, this is 2.5, 2.5, so we're at 2.8. It hasn't been 2.8 until 2015. The last time it was 2.8 is 2015, around this time. So 7 years ago, it hasn't been that high. Now, the difference is in New Zealand, the debt held by private corporations is not as high as in Canada. Canada's business sector is so much more exposed to rising rates than New Zealand. So that is a different dynamic, and it makes me even more bearish on Canada, because the fact is that all this is affecting the housing market in New Zealand. Well, when the chickens come to roost in Canada, it's just going to be an absolute disaster. And yeah, I mean, people are hell bent on taking out loads of debt. They are going to get absolutely killed out there, absolutely killed. So it's just insane. But it's I don't know, guys. I don't know about you, but I look at this and it just doesn't look good. And maybe if you're looking to buy a home, this is good news for you. But the thing is, as well, with this is a lot of people are going to lose their jobs. That's the fact of the matter. A lot of people are going to lose their jobs. So even though a lot of people want housing prices to come down, what they don't realize is with that, people are going to lose their jobs, and unemployment is going to go up. So it depends what you work in, what sector you work in. It's a great time to get a side hustle, start a side hustle. Some things like movers, cleaners, these type of side hustles are always going to be needed in a downturn, because people are going to need laborers to help them move. People are going to need people to go in and clean. If you can get deals with foreclosure management companies, power sale companies, things like that, then that's a good thing to get into. And believe me, they look around and they want decent people to do decent jobs cleaning houses and everything like that, because the foreclosures, they all get cleaned out, they get rid of the junk, and even taking away hauling people's junk can be a good side hustle. So it depends what you have. Like, if you have trailers and stuff that you can use for that, use what you have and try and figure out what a good side hustle or a good plan B is, because this is a great time to have a plan B, because in all honesty, none of this looks good. None of this looks good at all. But anyway, guys, thank you so much for watching this stream. Please hit the like button so it gets out to everybody. We're going straight into the next live stream now, which is about the impending recession that's coming, the yield curve. And I've also got a story that I want to read out from one of you guys. So anyway, guys, thank you so much for watching, and I will see you in the next one. Peace, guys. Bye-bye.